expiry, with the Nifty slipping below 26,000. Broader markets declined in line with the benchmark. Financials relatively outperform.
Coforge ends higher as it forays into artificial intelligence by acquiring Ancora for $2.35 billion. Brokerages give it a thumbs up, call it a bold move, but an expensive one which may weigh on its near-term earnings.
Gold and silver prices cool from record levels thanks to profit booking. Despite today's correction, silver prices are up 180% this year and gold is up over 70%. And welcome to Markets Forward, your go-to show where we aim to get you all of the key data points to gear up for the next trading day. I'm Ritu Singh and with me is my colleague Hormaz Patakia. Hormaz, hi.
Hi Ritu, and yes, it was a very choppy trading session today, and of course ending at the lowest point of the day for the index or close to it, the third straight day of losses for the index. So not good going for at least the Nifty, and managing a close just around that 25,950 mark. Same is the story for the banks as well. The Nifty was supposed to defend 26,000, it couldn't. The Nifty Bank was supposed to defend 59,000, that it couldn't as well. But the Nifty Bank has managed to hold off on one important level, which is the 58,890 mark, which is that 38.2% retracement of its recent rally. So that is one level that the Nifty Bank has closed above, courtesy of that final hour ever so slight recovery that we have seen over the last 30 odd minutes, Ritu. And of course, here is what we have lined up for you over the next 20 minutes. We have the top movers and shakers of the day. Vivek will be joining in to tell us just that. We also tell you about why stocks like Coforge and Hindustan Zinc, along with Hindustan Copper, were in focus today, along with the entire metals pack, of course. And of course, last but not the least, we tell you as to what are the key events to watch out for going into the penultimate day of 2025. Now to our first segment of the day, Vivek is here with all the top movers and shakers of the day. Vivek, over to you.
Well, thank you so much for that. Very thinly traded session. Not too much market activity, but market continued to drift lower, especially the broader end of the market, where volumes were thin. You did see significant price correction taking place among specific stocks. In terms of individual stocks that we were tracking, first on the list has to be HFCL, one of the top gainers of the day, ahead of its exclusion from the FNO series or from the FNO pack. The graphite stocks today, both of them, HEG as well as Graphite India, they stood out. Both of them did quite well in the session today. HEG higher by over 7%. Vikran Engineering, whole of last week, multiple order wins. Even day first today, a couple of order wins that the company announced. Stock higher by over 2%. And BPCL, select OMCs, especially in the last hour of the trading session, managed to see a bit of a bounce aided by much lower crude oil prices. On the other hand, quite a few laggards. Hindustan Zinc saw a very sharp intraday correction. You did see commodity prices on MCX correcting significantly intraday, and Hinzinc too fell along the price correction that you did see in the underlying commodities. Railway stocks, whole of last week, you saw significant price action on the upside, but today most of them did see profit booking. RVNL, IRSC, all of them seeing a correction of over 5%. EMS names, Dixon especially, this particular stock has cooled off significantly from the recent highs. Names like Dixon, Umber, names like Keynes, all of these stocks did see selling pressure today. Another name from the broader end of the markets, Timex. Remember this particular name, the OFS was announced, significant dilution by the promoter. That stock lower by 5%. And lastly, the one that you just saw on your screen, Angel One of the top laggards as far as the FNO space was concerned today.
All right, Vivek, we'll leave it at that. Thanks very much for joining in with those cues. Now we'll shift focus to Coforge, a key stock that was in focus today after it announced the acquisition of US-based engineering services company Ancora in a $2.35 billion all-stock transaction. Now, the annual revenue of the combined entity is going to be $2.5 billion, and the management has called it a defining moment for the company. But is the deal too expensive, even though good? Reema Tendulkar has the answers for us.
Thanks so much for that. I think that is the big question everyone is asking. Is this deal between Coforge and Ancora expensive? Well, the short answer is it's a good asset, a great asset, but perhaps a tad bit expensive. Now, Coforge is paying $2.35 billion for Ancora. This is a company with estimated revenues of $600 million, which means the acquisition is being done at an EV to sales of 3.9 times. Now, putting that in context, most global digital engineering companies today are trading in lower multiples. Now, this I picked up from a Motilal Oswal report where they're saying a company like EPAM is trading at 2 times sale. Globant is trading closer to 1.3 times. And even some of the recent M&A deals were cheaper. Now, Cognizant acquired Belcan last year at roughly 1.6 times EV to sale. Infosys bought Intech at about 2.6 times sales, which raises the valid question, has Coforge paid a premium? Especially when you see it in context, analysts point out to Encora's organic growth, which is low to 7 to 8%, while Coforge itself has been growing much faster at mid-teens. Now, JM Financial summarizes by saying the valuation looks rich given Encora's 7 to 10% growth profile. Now, moving on, when the price is high, there is also very little room for error. So what are the risks? Well, I can see 3 of them. One is integration risk, because this is a very large acquisition, the largest done by an Indian company. Encora is more than 30% of Coforge's size compared to their earlier deals like SLK Signity, which were smaller. So when there is such a large asset, integration is not the easiest. Secondly, the management is also guided for the acquisition being EPS accretive by FY27, but this requires flawless execution. The second risk is dilution risk. It's an all-stock deal leading to 21.25% equity dilution for the existing shareholders. And on top of that, Coforge has the option to raise an additional $550 million via QIP to retire the debt. As of now, it's not decided by the management whether they will flex that option, but it's still an overhang. And the third one is the overhang from private equity investors. Encora shareholders will hold about a 21 to 22% stake in Coforge, and 50% of this will unlock after 6 months, the remaining after 12 months. Analysts say that this is a potential supply which will cap the near term. But it's not all negative. There are some real positives here. Now, post-deal, Coforge becomes a $2.5 billion revenue company with EBIT margins of close to about 14%. The management is calling this a defining moment in Coforge's journey, and there is a clear step change in the company's capability. Encora brings AI-led product engineering, and the combined company will have nearly $2 billion of AI-linked revenue. The deal also opens up high-growth white spaces for the company like high-tech and healthcare, and the revenue synergy potential is significant, especially through cross-selling, and Coforge does have a very strong execution and an M&A track record, which gives the street some comfort. From a stock perspective, just over the last couple of days, the stock had declined close to about 10%. So some of the concerns are being addressed. But other than that, it's been such a wealth creator. Its 3-year revenue run rate is, the stock price return is 120%. In the last 5 years, it's more than 1,000%. So it's a bold, transformational acquisition by Coforge, and now it's up to them to deliver on that.
Thanks very much, Reema, for that. The stock, of course, ending the day today up about 0.2%. Let's also hear what the management had to say about this acquisition.
The acquisition of Encora is a defining moment for our organization. And I mean a defining moment. Born in the Silicon Valley, California, Encora is one of the select technology services firms with an AI-native DNA that provides software engineering services for digital native companies and Fortune 1000 enterprises. Encora works at the convergence of AI, cloud, data, with service offerings that span intelligent process design, agent-native product engineering, core modernization, AI foundation, data readiness, and AI ops.
And to take this conversation forward, joining us now are Sudeep Bandyopadhyay of IndiTrade and Jay Thakkar of ICICI Securities. Sudeep, gentlemen, good afternoon. Thank you for joining in. Before I come to you, Jay, on the levels on the Nifty, Sudeep, your take on Coforge. The entire street seems to believe that this deal is a good but an expensive one. How much do you think is already in the price considering the 3-day fall before today's move?
The price, and I think it's a fantastic deal. This is what we have been always complaining, that Indian companies have been sitting on cash, returning cash to shareholders through multiple means, but not taking the leap to get ahead in the AI race. And now that one company has dared to do that, I don't think we should be criticizing them or questioning the valuation. Yes, it is probably rich if you consider some of the past transactions which have happened in almost similar spaces. But times have changed. There are potential. I understand that the growth rate of Encora has been about 7 to 10%, which doesn't probably deserve the kind of valuation Coforge paid. But I think we look at the combined company and the strength of the combined company and what Coforge can do with the combined potential. I think that's what we need to focus on. Coforge has been very good as far as execution is concerned, and we will hope that the execution of this merger also is flawless and they can deliver and continue to deliver the kind of returns they have delivered to the shareholders.
All right, Jay, let me bring you in as well. Your view on the stock, Coforge, and the deal, and the broader IT industry as well. Where do you see opportunities now? Is the worst behind? Where are you seeing pockets of opportunity?
Good afternoon to you, Ritu and Homas. Well, as far as Coforge is concerned, since past couple of trading sessions, what I have witnessed in the derivatives data is that we have seen the increase in the short positions out here, and there has been a clear call writing at the higher levels as well. So I think that Ritu, 1700 on an immediate basis is the resistance. That's for the December series, and we have an expiry tomorrow, monthly expiry. So that doesn't make much sense. But then for the January series, I think 1800 levels wherein we have seen good call writing. Those levels will act as a very clear resistance, and I think for the medium term, 1800 to 1850 will act as a very critical resistance for this stock. It has formed a sort of triple top kind of a pattern, and till we don't see these recent highs, maybe the life high getting taken off, the overall trend will be sideways to negative going forward. However, I would say that on the downside, 1500 should be a very crucial or a critical support as well. So going forward, at least for next quarter, Ritu, that is Q4, I think the range for Coforge would be clearly 1500 to 1800, and it's just going to be trading within this range, probably a bit with a sideways bias. And as far as the overall outlook on the IT sector is concerned, I think we have seen a huge shorts which were actually created by the FIIs in the IT sector in this calendar year. In fact, almost 40% kind of shorts which they had created in the overall stocks or stock futures, out of which I would say 40% was created in the Nifty IT. I think that TCS would be one stock which still has a good upside potential from the short covering point of view. In fact, this would be the first quarter, Ritu, after the four consecutive negative quarter, after which we'll be having a positive quarter for TCS. Going forward, we may see the levels of around 36 to 3700, and I think any dips now on the large cap IT names should be utilized as a buying opportunity, because mid cap, however, have already outperformed the large cap IT, right? So now is the time for large cap ITs.
Yeah. All right, time for large cap IT, but let's shift focus to the metal space. If you pull up Nifty Metal Index, started the day very strong, but ended the day with cuts of about 0.2%, within which, of course, Hindustan Zinc, these are some of the names that were buzzing in trade that ended with cuts eventually. But precious metals, they pulled back after a sharp rally last week. Gold and silver, they slipped from record highs amid profit booking that we saw today. Meanwhile, platinum and copper also hit record highs on hopes of a Ukraine-Russia peace deal. Manisha Gupta joins us now. Manisha, what a year it has been for metals. Take us through what happened.